Let's focus now on the current situation. I think one important element is the big shift to deep tech. I've seen that since COVID ended. COVID, as you know, was a big boom for anything consumer tech and enterprise tech because of massive adoption. Startups were saying, yeah, look, our plans for the next 2 years were basically compressed in 1 year because of COVID and massive adoption of like Spotify or streaming services. And obviously enterprise had to move to remote working and that accelerated adoption. But now there's really an alignment between public agents and the private sector on the importance and the value opportunity in deep tech. From the public sector, it already started with COVID, where we realized that basically Europe was not ready to face such an emergency, not only on the, let's say, health dimension, but also there were disruptions in the semiconductor supply chain, et cetera, and the European Commission, for instance, started to talk about European technological autonomy and sovereignty. And since then, a lot of resources have been put into financing those critical industries for Europe. Space technology, defense, of course, lately, very topical, semiconductors, health, quantum computing, et cetera. On the other hand, from the private sector, there was this realization after COVID that probably the value creation opportunity for consumer enterprise tech had somehow compressed, and there was big opportunity in deep tech because there would be more market demand in certain sectors. So it made sense to kind of shift a bit more towards deep tech. What we have seen is that the number of purely deep tech focused funds in Europe is increasing rapidly, but also very established generalist VC funds are devoting more and more resources into exploring and investing in deep tech opportunities. Just as a data point, in 2025, 1/3 of the funds, a number of funds, but also the invested volume was devoted to deep tech, including dedicated funds to quantum, to defense, to cybersecurity. Also, market data, it's around the same figure, like 1/3 of the market is AI. But deep tech requires deep pockets, and we go back to the problem of scale and how to build global category leaders from Europe. And this data might be a bit biased, but until Q3 2025, top 3 deals in Europe raised 18 times less money than in the US, and only like the biggest deal in the US raised as much money as all the venture capital investments in Europe until that time. There's a trick here. Most of the rounds, these massive rounds in AI champions, are led by corporates, not by VC funds, and not even by the corporate VC arm of a corporate, but like from balance sheet, etc. So there's a little bit of a trick there. If you look at 2024 data, the venture capital financing market in the US was 2.8 times bigger than in Europe, and Europe had been catching up very quickly. But still, it's true, we need more volume, we need more scale.